Hello, John Mills, John Mills Residential Mortgages. It is Wednesday, March 19th. This is your weekly market update. The Fed had their meeting today, an announcement. No big changes. There's no change to the federal funds rate, and there's also no change to the forecast of 2 cuts in 2025. Both of those most likely coming in the second half of the year. What did change when Jerome Powell made his comments based on this is inflation is running higher than expected, 2.8 versus 2.5%. The growth of the economy is slower than expected, at 1.7% growth versus a forecast of 2.1%. And unemployment is higher than expected. So unfortunately, all 3 of those indicators are negative indicators. And the Fed's interpretation of this, it's too early to really change policy moving forward based on this, but it does create more uncertainty in the market. So they're unchanged in their position, but it's definitely stuff they're taking into account and thinking about it as far as how they move forward. Some interesting information I got from the Scotsman Guide, which is a trade publication for mortgage and real estate. There's been a surge in spring sales of real estate sales, purchase sales, and particularly in key markets like Los Angeles, which perhaps is understandable with the fires, but it's going on across the country as well. So I think more people are taking action to list their homes and to buy homes. An interesting report from Zillow showed that March to May was the best time for sellers to sell their home, that they get a little bit extra sales price, depending on the market, anywhere from 1% to 3% more by selling their home in March to May. So something to keep in mind if you're thinking about listing your home. On a personal level, I'm seeing more purchase activity this spring than I've seen in the market going back to 2021. So I'll say 4 years. My realtor partner and I were doing a lot of business, selling a lot of, purchasing a lot, helping buyers buy homes here in the South Bay as well as up and down the coast. Just had a VA loan closed in San Diego, and a lot of stuff here locally, investment properties, single family homes. We have a triplex in escrow right now. Just a lot of activity, which is great for us, and just showing that consumers or buyers are out there and they're getting more aggressive, and it seems like that the aperture is opening a little bit for more real estate activity. The other thing I wanted to touch on is we were sort of talking about this morning. One of our group meetings, staff meetings this morning, is right now homeowners in the United States are sitting on more equity than they've ever sat on in the history of the United States, the history of real estate in the United States. If you purchased a home or you owned a home in 2019, it is appreciated likely 25 to 30%. So just as an example, if you had a home that you bought in 2019 for $1 million, you probably have $250,000 to $300,000 in equity that you can use, you can tap into to accomplish some of your financial or real estate goals. And using that 250 to 300 grand to do things like renovate your house, build an accessory dwelling unit, an ADU, to generate more income. Use that money to go purchase an investment property that's going to generate income and appreciate. If you have credit card debt or other debt, you can consolidate that debt down and lower your payment as well as pay it off faster, which is a great financial move. So debt consolidation. There's a lot of ways to use that 25 to 30% of equity in your home to push your financial and real estate goals ahead. So I appreciate any and all referrals and inquiries. Happy to help anyone out there. I hope you reach out. Have a great week.